Hello and welcome to another weekly market update. After the market closed, well, we're just into trading action halfway into the 10th of June today actually. I usually do this on the Sunday night, but I want to just see how the market opened today because it's giving very mixed signals. It just can't seem to make its mind up really. So here's the big picture. We look at the S&P 500 over the several years. You see the bottom here, and each little up and down peg is a week of price action. It's smoothed out for us by this average of the last 40 weeks, which is the blue line at any given point, and the red line, which is over the last 70 weeks. Sometimes I look at that as well. So the bull market started here with my proprietary signal, and it ended here with my proprietary signal, making good profits, and it's kept me in cash for that kind of, that more of that investment, longer term, bigger picture mode since 22nd of October, and has not yet given me a signal to get back in for all this up and down indecisiveness really. And I've been waiting. I was hoping to get a brand new signal, which probably would have been at the end of this month. Then we had this bad week here, which upset the the trend a little bit. I did say that if it broke that 2800 down, it was going to go down further, and it did. And then it just did a big reversal again last week with a very strong up week that we'll look at more closely in just a second. And it looks like it's following through on that today, which was what I was waiting to see. So very interesting action. I must admit, if I do get a brand new bull signal, it's going to be a weak one. And it may be that I have to, wait a little bit longer to see something more convincing because of that. What the market really needs to accomplish now is it's got to get above this all-time high here. If it turned around, I did mention that 3,000 is an important psychological round number. And I said that if it turned away from that, for the shorter term, that wouldn't be good. It did turn away, it wasn't good. So now it's going to try and have another run at it. And that's going to be the big test. If it can break 3,000, then it's looking good for we could have a brand new bull market here. If it turns away again, or doesn't get at least up to this high here and turns away, we could have an ominous kind of top forming here. But as I look at this right now, at this point in time, obviously I'm still in its cash since last October, and really it's just it looks like a toppy chugging sideways kind of market here. That's just kind of could be that frustrating time when the market's just is telling us to just sit on the sidelines and wait it out, as it has done since last October, as I said. Let's zoom in on the 6-month picture here where I get a bit more detail. So here we see that bounce of last week, but one of the telltale signs here that is a little bit ominous is down here. I see the volume, which is the kind of conviction behind this move of the large institutions, and what we should see here is the volume, these little bars rising as this rises, but it's not. It's been going down, and we're also saying this is quite a stretched and overbought situation right now. That's not to say it can't stay overbought, but one of the weak indication of this is it's not telling us everything, but it's that volume. We've got to see if this can keep it up, not run out of steam, and break this important point here I've been explaining about above here, 2950. So it's definitely playing us up, and that's usually a time, to be honest, which, as my signal has said, just stay out and wait. Let's see if we can see what else is going on in the other signs. Volatility is still pretty low. That's not really saying much. The rush into treasuries I explained about last week, which is typically a move into safety because people aren't liking what they're saying, it's kind of holding up there, staying up on the higher ground. So there's definitely money, looking for a safe haven. That could be the Fed move that's coming up as well, when they're predicting that they're going to raise rates, and that could be a surprise if they don't. And there's the dollar, which is also holding up. So money is definitely in safe havens. It's staying there, and the stock market is no guarantee, but it's showing signs of running out of steam. So we'll just have to see what happens here. In other news, let's look at Bitcoin. This has been a story we've been following. That anyone still thinking that Bitcoin is, the story is Bitcoin's dead. This is going to blindside people if it carries on as it has been going. There's the Here's the Bitcoin story. And it's it was going down for a long time, and it's got a it's fighting its way back, and the 40-week moving average is starting to turn up here, and it's consolidating, which was good because you don't want it to get off to too crazy a start, but it's got a nice jump here, and it's just bouncing around in this kind of box here, waiting for its moving averages to sort of catch up with it. So it's all steady action there as well. So that's all for this week, and I will speak to you next time.